This is Yahoo Finance Live. We're setting up for the opening bell in just a few moments. And as we've been talking about futures, really little changed here this morning. Let's talk about the trajectory from here. Matt Maley is with us. He's managing director and equity strategist at Miller Tabak. Matt, it's good to see you. So we've got the S&P 500 and the NASDAQ that closed at record highs last week, but we feel like we're in this sort of drifting period here. A few minutes ago, Brian was just highlighting some of the outperformers this year. A lot of them have been energy stocks as we've seen that rotation. So what happens now? We're at this sort of midway point. Are we at any kind of turning point, or are we just going to see some further drift from here?
Well, yeah, I think you described it so well because the drift aspect of it, because it just seems like, we make a new high almost seemingly every day. And it's, oh, my gosh, so the market must be flying. Well, no, those new highs are tiny, little new highs. So the trajectory is definitely flattened out in the last couple of months versus the first 4 months of the year where it was really quite strong. I mean, that's not the end of the world. Maybe it's just taking a breather. But I do think that, investors need to be a little bit careful here. I mean, we have valuations that are quite stretched, and a lot of people say, well, valuations are a lousy timing tool. That's absolutely true, but it is still gives you a good idea of what the risk reward situation is. And when you have valuations that are very stretched, especially with a leverage and margin debt at very high levels, that does raise the risk. And I just think if we rally further from here or drift further from here, I think it could be an opportunity to raise a little bit of cash, to take advantage of a correction we get a correction almost every single year. This year, I think, is going to be no different, and people just need to be a little bit more careful, and that stock selection is going to be really important as well.
And, Matt, we're coming into a very newsy period here. Earnings season will get underway starting next week. Expectations have continued to come up through, the run up to this reporting period, much as we saw ahead of Q1. Are we setting up for a similar type situation where every company gets to come out, beat on the top and bottom line, everyone goes home happy? And does that maybe set the market up for some major disappointments if they were to come through?
Yeah, it's an interesting thing, because usually during the year, as we move through the year, earnings estimates start way too high and they need to come down. So when you get to the second quarter, if companies beat expectations, it's like, they merely just beat, lowered expectations. In this case, though, and those earnings estimates have gone up quite nicely this year. And so if those companies who do beat, and especially those who provide the good guidance for further beats, they're going to do quite well. But again, like you say, the ones who miss are going to have some serious problems. That's why stock selection and group selection is going to be very important. But also, too, it takes us to a level. I mean, even though earnings are coming in well and earnings expectations are moving higher, the earnings would have to go through the roof to take the market into fairly valued range. So again, the risks I still think are a bit high, and therefore people need to be careful about where they put their money.
Matt, on the stock selection front, this morning you're flagging a pretty good move so far in Amazon shares. Andy Jassy just took over. Looks like the stock, looks like investors they seem to be okay with Andy Jassy thus far. Makes sense. He came from AWS. Do you think Amazon stock is ready for an explosive breakout into earnings?
Well, to be perfectly honest with you, I'm worried about it. However, because it's been in this sideways range for almost a year. And the one thing that we do know, that if you get a multi-month range, whenever the stock breaks out of that range in one direction or the other, it usually sees a big move. So since we're up at the top end of that range, the upside, obviously, potential is quite large here, especially because it's not just a multi-month range, sideways range, it's almost a full year. So if it does break out, it's going to be very, very bullish. But you have to wait for those breakouts. It looked like for sure it was going to break out back in late April, early May, and instead it pulled back down. So to be honest with you, this is one of the key things I'm watching over the near term. If it does break out to the upside in any kind of meaningful way, I'm going to have to reassess the way I'm looking at things, because I do think some of these the growth stocks are set to pull back, and the value stocks are set to outperform again. But if Amazon breaks out to the upside, I'm definitely going to have to reassess that view.
Well, and that just more generally, it feels like in this market, amidst this drift, that it's hard to find things that are about to break out, that are about to see that sort of move to the upside. Is there anything that you think is sort of under the radar or underappreciated by the market where we could see that kind of movement, either talking about sectors or individual stocks?
Well, I mean, the thing is, I just think that we don't have major league or undervalued stocks or major league because we've had this huge rally over the last 15 months, but we have seen some of these value names see significant pullbacks, and I say significant, but fairly decent pullbacks, like the bank stocks. I believe we can talk about the Fed a little bit. I believe the Fed is going to taper because they're providing emergency level of stimulus at a time where the emergency has passed. So as they taper back, I think rates will move back up, and the recent pullback in the bank stocks is going to provide another great buying opportunities for these names as we move through the summer. And I do think also the energy stocks, even though oil is making new highs, the energy stocks have actually flattened out recently. And I think as oil is getting overbought on a very near-term basis, it'll probably pull back. That's fine. That would be normal and healthy. But I do think that the energy stocks, on any kind of weakness as we move on that kind of technical pullback, will provide another great opportunity to buy this group, which has obviously had a great 10 to 12, almost not a full year, but about good 10 months here. And I think both of these groups are going to go back to outperforming in the second half of the year.
So, Matt, just based on oil's rise, you're trading long oil stocks. Does that mean you're shorting oil-sensitive stocks?
Well, I mean, to be honest with you, the one that I'm actually a little bit nervous about is the ones that have more exposure to natural gas. And again, this is only on a technical basis more than anything else, because natural gas has become incredibly overbought on a technical basis. And it's also become incredibly overloved. You look at the polling of futures traders, the daily sentiment index, it's well into the 90s, 90% bulls in natural gas. That's something that is almost always followed by a pullback in any asset. In this case, it's again natural gas. So those, I think, with a little bit more natural gas.
Hey, Matt, sorry about that. We were getting a little bit of bleed over from the audio from the opening bell there, which is Alight, which is a company that is celebrating its listing. It's going public in a SPAC deal. It's a cloud company. Matt Maley of Miller Tabak, it's always good to see you. Thanks so much for being here. Appreciate it.